What is going on, Future Focus family? My name is George, and welcome about investing on this channel. And today we got a lot to talk about. I wanted to talk about the housing prices and what's going on in the housing market, and try to help you identify if right now is a good time to start investing in a house or if you should wait. We're also going to talk about stocks and crypto prices and try to figure out what the next move is going to be there. But with all that said, as always, the first thing we're going to get into is the current prices in the market right now. So the S&P 500 is currently down 0.17, but this is after 4 straight days of an increase. So seeing a decline, nothing goes straight up forever. So seeing a decline is never something to be really worried about. I actually expected a bigger decline today, like a 2% pullback, but it's still early in the day. We had a bigger pullback earlier in the day, but as of right now, we're only down 0.14%. The Dow is down 0.30%. The NASDAQ is down 0.18%. The Russell 2000 is actually up slightly. It's up 0.27%. Crude oil is still hovering above the $100 mark. It's at 103.41 right now. Gold is up today and silver is up today, which is good because we're seeing an anti-correlation between the stock market and the precious metals markets. You never want to see those going up and down in tandem together because it kind of defeats the purpose of investing in one or the other. The 10-year bond is currently down at 2.31. We have the Bitcoin is sitting at $46,602. It is down 1% right now. The CMC crypto as a whole is down 1.12%. But as we'll look at the charts later, that's after a big run. All right, we're going to look at a critical level there. Before we get into everything today, if you have not subscribed yet, support the channel. I appreciate it. Matt, he appreciates it as well. He's not with us today, but we appreciate it. So please hit that subscribe button, like it, like the video. My brother calls it the Al Gore. You know, we're talking about the algorithm. It's a little joke. But yeah, help the Al Gore out. All right. So with all that said, let's jump right into this. All right. So the first thing we're going to talk about is an article here. Let me close this up. All right. So home prices pick up again in 2002. So that's something we need to take a look at. The home prices growth has accelerated in the first month of the year, reversing a decelerated pace in the past few months. So the S&P said Tuesday that its S&P CoreLogic Case-Shiller National Home Price posted a 19.2% annual gain in January, up from 18.9% in December. The annual growth rate remains elevated, the fourth highest reading in 35 years. The 20-city composite posted a 19.1% annual gain, up from 18.6% a month earlier. The 20-city resulted surpassed analyst expectations of an 18.55% annual gain, according to Bloomberg consensus estimates. Home prices changed in January 22, continued the strength we had observed for much of the prior year. So why is this? Why are prices continuing to go up? And currently, it's still a demand issue. A lot of it is still people want the house. They haven't found the house that they really wanted to get into, and they are looking for something. And some people are willing to pay $40,000, $50,000 above the asking price, which is insane. But people are doing that. And as long as that continues to happen, all you're going to see is these prices continue to soar. Talking about the Schiller Index, we're going to take a look at that. And the Schiller Index is just an average that is put out. It's been happening since 1987. And it gives you a picture of what housing prices have done as an index in total throughout the United States. So let's get back into it. All right. So U.S. home price, the Schiller National Price Index. So this is from the year 2000. This is what the houses have done. As you can see, this is where the housing bubble was. And in 2007, the housing bubble deflated. And after that, you saw a decrease. And the interesting thing that I want you to see here is that the index was at 140,085 back at this time, right? If we go a little bit forward to, let's say, February of 2012. So if you bought a house here in this, let's say March, we'll say December of 03. If you bought it in 2003, that means if you wanted to sell in February or June of 2009, you would be selling for a loss. This is very important to understand. If you wanted to sell in 2012, you would still be selling for a loss. And this is almost 13 years later. This is about the average in the United States. 10 years is the average where long-term investors end up selling their house because they want to move into something a little bit bigger, or they realize they can't afford where they're living at and their income has decreased, so they move into something a little bit smaller, or they go back to renting. Um, some people buy an RV and they want to travel the United States. There's different reasons, but think about it. If you were to buy here anywhere in the high, let's say here in July of 2006, you wouldn't have made your money back until about 2018. So 12 years later, you would have been in the positive finally. That's why you need to look at how long are you going to hold your house for if you are looking to buy it, because if you're going to sell it 10 years from now, right now may definitely not be a time that you want to look at investing in a house. So Phoenix led this 20 city composite for the 32nd consecutive month, while Tampa and Miami followed. Phoenix posted an annual gain of 32.6. Tampa and Miami posted a 30.8 and a 28.1 annual gain, respectively. The strength in home prices continues to be very broadly based. All 20 cities saw price increases in January 2022, with prices in 16 cities accelerating relative to December's report. The results were somewhat expected since the index is a lag indicator of home prices. Last week, the National Association of Realtors reported that the median existing home price for all housing types rose 15% to 357,300, up 15%. So now there's two things you need to look at when you're analyzing data. You want to know if it's the mean or the median, and those can be swayed a different way. So anytime you're hearing something, especially from like the realtors, you have to ask yourself, what is the purpose of a realtor? What do they want? What do they want their end game to be? They want people to be more motivated to buy and sell, because if people are buying, they're making that commission. That's what realtors, how they make their money. So a lot of the times when they put out their data, it's kind of swayed to give you the concept that they want to they want you to perceive. So always analyze: are we looking at the mean or the median? And look at both, because one may look great, but when you look at the other, it may paint a completely different picture, and that's something you want to see. So a lot of it is based on region, and a lot of it is based on what state you're in. So I brought this up as well. And this gives you like the median home price by state. So right now we're looking at California, and the median home value in California is 505,000. Down here you see the scale and what the different colors represent. So right here, this very dark blue means the median is over 650,000, and that's over here in Hawaii. It's 615,000 and 300. Now, if we go to the most lightest ones, we could go here to Utah. You could buy a house. The median price there is 279. If you go down to the cheaper range, let's see, Kentucky, they have 141,000. Mississippi was another one that was really on one of the shorter ones. You have Michigan up here, 154,900, and theirs has almost doubled in the last 5 years. But when a home buyer is searching for a home, there are many factors to consider. Among these are the style, proximity to family or large metro areas, safety, and the job market and school districts if the home buyer has any children. Two of the most important factors to consider when purchasing a home are price and location. Buying a home is a huge financial commitment and is likely the largest investment an American will ever make. According to Zillow, the typical value of U.S. homes is $269,000 as of January 2021, a 91% increase from January 2020. Between 1999 and 2021, the median home price has more than doubled, 111,000 to 269,000, because of the ever increasing home prices. Many people decided to delay buying homes or decided not to altogether in the majority of the United States. We got Larry Miller. Larry Miller says the housing market is going to crash soon. And we're going to look at some data that kind of backs up what Larry Miller is saying. So, Larry, thank you for that comment. I know you got bought recently, so we could talk about that. So this is the S&P Schiller national average that we were talking about. And right here, I have it from 1987 when the index was created all the way till today. And as you can see, we could take a look back when the video, when I first started this video. If you were to buy down here in October of 2003. You're not making your money back till 2013. If you bought here at the height of the housing bubble, you would have bought at an average of 183,000, and you wouldn't have made that 183,000 back until August 2016, October 2016. And this is not even including like closing the house, like all the money you paid in taxes all through the years. So think about that, especially for like a rental income. Um, how long is it going to take for you to make your money back? Right now, you take let's look at the 1 year, and it's been basically a straight line all the way up. If you buy here, it can be like one of these moments. It kind of looks like one of these moments here. Like you're at the high. Like if we look at the straight linear path that we took all the way here from, let's say 2000 all the way till 2007, like it kind of looks similar to the trajectory that we took back here in these dates. And of course, there's more money and liquidity in the system, so things are always going to be worse than they were before. Right now, I would not be personally purchasing a home, even a rental house, because I still want to make my money back as soon as possible. I want that house to be paid off as soon as possible. Next thing we'll look at is comparing the price growth for homes against stocks. Like, so how has housing performed against stocks? And this one is since January, we'll look since January 2019 to January of 2021. And you can see what the index has done. In red, we have the S&P Schiller U.S. National Home Price Index. And then we have the total share prices for all shares of the United States, Q1 2020. So it's the entire stock market. As you can see, we bottomed out here. We had like that great dip. And ever since then, we have just surpassed them up in January 2021. That's something to take a look at there. This is kind of the same thing, but this is going back and looking at a smaller window. This is looking at the recession. So the reason I brought this one up as well is because what if we're like in the phase right now where we could be possibly facing a recession soon. We have a lot of factors locally, nationally, and abroad that can put us into a recession. All right. So how did the housing market and the stock market react during this recession? So as you can see the decline here in the housing, and then the stock market. You can see what it did here. We had that big bottom, and ever since then, it kind of bombed up. Even though in the stock market, you're always going to have the more dramatic drops, there's always a more dramatic increase as well that comes along with investing in stocks. But it's always good to have a good balanced portfolio. Right here, we had a correlation, October of 2007, and that's exactly when the whole Lehman Brothers thing came out. You know, I don't want to insult your intelligence and waste your time on that, but that's when the market crashed, the housing market and the stock market. Here is just manufactured. The only reason I brought this up, the relevancy here is, so just for perspective, in the dark blue, we have the average sale prices of new manufactured homes, single. We have in red the average sale prices of new manufactured homes, double. In green, we have the S&P, the entire U.S. National Home Price Index, and then in purple, we have all transactions, house price index for United States. And as you can see, this one goes back to 2014. The average sales price of new manufactured homes for the first time since that period has finally surpassed the S&P Schiller U.S. Home Price Index. So anytime there's a cross here, that is a signal not to purchase home. Do not purchase in this area. As long as we continue to bounce off here, that is a signal that you should not be buying. The next thing we're going to segue into is that not only are the housing prices going up, but along with these housing prices, and something that is making people more pessimistic about buying a house right now, is the rising rates. But is it all wrong? So this article right here talks about why raising the rise of interest rates may be a good thing for home prices. So here, let's take a look at what they're trying to say, and we'll discuss it. Home prices are soaring, and later this morning we will find out about how much. On top of an exorbitant home prices, mortgage rates are on the rise. The 30-year fixed mortgage, this is the most common among home buyers, topped 4% earlier this month for the first time since 2019. As of today, we are almost above 5% for the average. But higher interest rates may actually be a good thing for home prices. Let's find out why. Low rates make housing prices less affordable in the long run, and rates have been on a long downtrend. So the notion is counterintuitive, but worth exploring because it's a valid one. It's no secret that low interest rates have fueled the overhead housing market. Low rates coupled with depressed inventory levels have been driving up prices. The simple law of supply and demand. So home prices have been increasing every year for a decade now, and medium sales prices up about 15% in 2021. We talked about that a little bit earlier. Meanwhile, rates have hovered around historical lows. The rate on the 30-year fixed an all-time low of 2.83 in October 2020, and that's literally when I closed on my refinance. So for the first time ever, like I called the bottom of something, and I feel really fortunate that I was able to close on my refinance during that time. With rates at historic lows, you create this demand level that is insatiable. All right. So the 30-year fixed mortgage rate since 1972, and you can see what the annual rate has done. There's been peaks and valleys. There's been like you can see all the ups and downs throughout the time frame, but the general trend has been down. Um, and the kind of if you go back here to 1977, there was a market crash around this time as well. As you can see, we had a big increase here. So it 9.7, 11.2, 13, 16.3. That was the highest it ever got. We're kind of in the same financial and economical environment that we were during this time right here, without all the geopolitical factors that were occurring back then. Um, we could see the interest rates go up this much. Like, do not be surprised to see a 9% interest rate, a 10% interest rate. We've been there before. So do not be surprised if we go back to those type of figures. Homes are being traded at a rapid clip. Right now, it takes little over a month to absorb all the homes that are for sale in the US, according to the NAR. In a normal housing market, when supply meets demand, it takes about 6 months for inventory to be exhausted. And that's the 6 months that it takes for everything that, like for all these price, like the rise in rates, for these to reflect the home prices, it takes about 6 months as well. So if we hit a 6%, you're not going to see the houses hit that mark until 6 months later on down the road. So just something to keep in mind. As Federal Reserve Jerome Powell said during a Senate committee hearing earlier this month, housing is a very interest sensitive sector, and rates moving backwards back towards more normal levels should act to cool off housing markets. The uptick in rates may be starting to do its part and bring down demand down a notch, like we talked about. Higher rates will slow down the velocity of sales and allow inventory to rise, reducing the rampant bidding wars, said Miller. Is that Larry Miller? I don't know. Noting the bidding wars have accounted for half of the transactions in the dozen regions that we cover in the United States. So this is the whole purpose of this article here is telling you that the reason this is a good thing is that because the rates are starting to rise, that means demand is going to fall. So when demand falls, prices fall. But do I really want to pay 5% even though the price went down 4% or 3%? So keep that in mind as well. That's some math that you have to internally do and ask yourself. So that's all I have for housing right now. Right now, we're going to take a look at the S&P 500. One of the lines that I put up here is a trend line that I saw was a one. Let's look at 1 year chart. So on the 1 year chart, I saw this level of resistance and support here that bounced off on a bunch of times. And I have that one at 4,595, which is slightly above where we're trading at as of today. So if we take a closer look at the 6 month, you can see that we're bouncing off that area right here. The next level down that I have is 4,534. So if that's another area that I saw, like looking back, that I thought would be the next level of support on the way down. Taking a closer look, as you can see, we're just bouncing off that line right now. We haven't closed enough days above this mark for me to get confident to think that we've hit the bottom, but some people are out there speculating that the bottom is actually in, and they're saying, the bottom has been hit. By bottom, they mean the bottom that we hit here this month of 4,156. Some people think that's the bottom. Another thing I put up down here was the MACD. And one thing you want to look at when you're looking at the MACD, anytime the blue line is underneath the orange line, it's a bearish signal. Anytime the blue line is above the orange line, it's a bullish signal. So if we look at where we're at right now, the blue line is underneath the orange line. And that is showing that, right now we're still in a bearish territory. So tread carefully. Am I buying in the stock market right now? No. I am not buying. This is today's action. As you can see, we bounced off a little above and below that line that I laid out. We're currently above it, but we're still down on the day. This red line represents where we opened up today. You can see that we're slightly below that. So just keep in mind, we're still on the negative for today. It's not something to be worried about, nothing to be scared about. I'm not buying or selling for today at all. And that's that's stocks. Let's look at crypto. What is the crypto market telling us? This is Bitcoin. So this is look at the 1-year chart for Bitcoin. As you can see, we're kind of in the same boat. We've been hovering above that time frame. But I laid out the 46,000. Let's see what right here, 46,000 is a level that I think if we could stay above that, it'll be a bullish sign. The next move up would be about 51,000 or 49,000 first, and then 51,000. But here you can see in the last month, at the end of the month, we've closed above that day a few times. We'll bring it down to the weekly look. This week we've been above trend, except for one day here. There was a little outlier, but it looks like we've hit some capitulation here. We're consolidating in that period. Now, the question is the next big move going to be a move upward or a move downward? Right now, it's just a wait and see game. It's not a time to make any big purchases or big sells because especially with cryptocurrency, it could go either way. That's all I have for you guys right now. Thank you all for joining in. As always, invest in me and press that like button. Invest in yourself and smash that subscribe button. One of the things I'm looking forward to doing for you guys is actually giving you a list of, like, let's say 5 or 10 dividend stocks to invest in during this period of uncertainty. We could look at also maybe on a future video, 5 stocks that I think are high growers or 5 stocks to avoid. Let me know what you guys are looking for, and that's what I'm here to provide for you guys. Thank you for the continued support. I love you guys.